All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. Quick sound check. If everybody can hear me loud and clear, do me a favor, drop me a one in the chat on this Friday morning, and we could go ahead and get this session started. Joy, I appreciate it. I see the one. Thank you very much. Hey, let's start by taking massive action, meaning that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. We want to always trust in our education, strategy, trading skills, intuition. Let's always imagine our trade successfully materializing. We want to be sure to obey our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trade has commenced. All right. So let's get right to it. Hope everybody has had a wonderful week thus far. We are headed into the holiday weekend here in these United States, right? So looking forward to a much needed break. Let's take a look at it though. The dollar index. So the dollar index fell to around 99.6 on Friday and was set to lose more than 1% for the week, weighed down by concerns over the U.S. fiscal outlook, President Trump's new budget bill, the big beautiful bill, which includes tax cuts and increased defense spending, has raised concerns that it could further inflate the U.S. national debt. The Congressional Budget Office estimates the bill will add nearly $4 trillion to the national debt, fueling fears of long-term fiscal instability. These concerns were compounded by Moody's recent downgrade of the U.S. credit rating from AAA to AA1, citing ballooning deficits and the rising cost of servicing federal debt. The greenback also faced pressure from a lack of progress in trade negotiations, which has prompted a shift away from U.S. assets. However, China's foreign ministry noted that Washington and Beijing have agreed to maintain open lines of communication following a call between Chinese Vice President Minister, uh, not even going to try to, Ma Zhao, I don't know, and U.S. Deputy Secretary Kurt Campbell. All right, so I don't know. I don't know what the sudden concern is. The idea of this bill has been on the table forever. So I don't I don't get the growing concerns. Maybe they thought that somehow it was going to shake out differently, but I don't know why they keep giving the president, you know, I don't the benefit of the doubt. I don't know. I don't know why it seems to be like this growing over has raised concerns. I mean, this has been on the table. This has been on the table, the idea forever. So and then it passed the House and is moving on to the Senate, right? So this is what we've been talking about here for quite a while. Outside of the tariff situation, that this was going to hold a lot of weight, and we're seeing that really coming to fruition now, especially since it passed the House. They were trying to get this thing, I think the original goal was to get this thing passed before the holiday, and they at least got it to pass the House. So this is where we are, 4 trillion to the national debt. All right. So let's see how it goes. Continue to follow. Uh, and I don't know what just happened there, but oh, there we go. We'll continue to follow and see what happens. Not sure what is going. Oh, there we go. Hold on, everybody. Computer issue here. All right. So here we go. Um, Moving back, looking at trading economics, we can see here that the Eurozone negotiated wage growth lowest since 2021. So that kind of Well, it says it right here, right? The data reinforces the ECB's view that wage-driven inflationary pressures are easing, strengthening the case for additional interest rate cuts. That's where I was going with the thing, right? So the ECB is widely expected to lower rates again next month. All right, so we'll look for more interest rate cuts from the ECB, and we'll see what the impact is going to be overall on the euro. UK retail sales exceeds growth forecast. It's good for the UK. Japan inflation holds steady, 3.6%, right? So kind of staying right there at that level. Um, and that's where we are. That's where we are. We'll take a look at commodities, take a look at gold. Rose to 33.30 on Friday, parting losses from the previous session. So it's kind of moving back and forth and on track for a weekly gain fueled by a safe haven appeal among concerns over the U.S. fiscal outlook, right? And so we know uh, when we take a look at gold, we were talking about it yesterday. Tyrone's call was right on, was spot on at the level he was at. Reese was playing a 80-20. That's still trying to just bouncing around as it often does. We'll see what happens with it. On the Forex factory front, um, yesterday uh, we talked about the PMIs and stuff like that, but we were waiting to see what was going to happen with unemployment. Claims in the U.S. came in slightly under 230 was expected, came in at 227. But the manufacturing, right? Manufacturing and services PMI, right? Which above 50 indicates expansion, right? So the economy continues to be resilient. Came in at 52.3 for manufacturing and services PMI. Um, yeah, the natural gas stores came in kind of right on par. A little bit of right at forecast. Macklem spoke yesterday. Um, £50 global trade. He says so nothing really there, but and then I don't think Williams spoke at all regarding monetary policy yesterday when I was checking to look on some things. Let me see. Williams does not comment on monetary policy, economic outlook. So nothing for us there really. And then today, let's see, Friday went over to retail sales. We got core retail sales for and retail sales overall month over month for Canada. And then we've got some more FOMC members speaking. I don't think any of them going. I don't know. He might, but yesterday he didn't speak about monetary policy, so I'm not sure if any of the FOMC members. It's multiple today. One, two, three speaking today. I don't know if any of them are talking about monetary policy. So that's that. Looking at Bloomberg this morning, right? It's talking here. That's the U.S. ban at Harvard, all types of stuff there. Um, anything? Nail biter looms, Senate ponders tax. So everything is around that bill. Stock ignoring Trump's trade war after wild ride. Eventually they move on, right? Once they figure out how to trade around it. That's it. Fairly light on this Friday. Any questions regarding the fundamentals? Any thoughts, comments, anything that you all may have read recently uh, on the fund? No, everybody kind of just chilling. All right. Uh, Good enough. Let's take a look at what's going on. Right, still bouncing back and forth in the stock market. So everything was pretty much down yesterday. Tracking the S&P sectors. Uh, Not a whole lot. And keep in mind, right, we're moving into the holiday weekend too, right? People off, taking a breather, you know. Not a whole lot going on. We may not see any movement in the market today, right? Always could be a surprise or two, but we shall see. All right, no questions on the fundamentals. Hey, look, Freedom Friday. What pairs are you all looking at? What do we want to look at this morning? Anything in particular? UJ? VIX was playing around 20. Yeah, I know, right? That. That started to creep up a bit, right, Joy, after that big beautiful bill. Oh, what just happened? 20.17 moved up a little bit. Also looking at gold. UJ, Euro CAD still playing at 80.20. Buy on the S&P 30 minute. All right, let's take a look at it. So the first one was that UJ. So let's take a look at the UJ. See what's going on with it. Oh, that dollar's down, right? So what do we have on this 30? 80.20 played out on the 30. We got that one to play out. That hit both targets. Then when U-turn, look at that. That's beautiful on the 30 minute. Now we're making this deep correction, right? That's on the 30-minute play. So hopefully some people are taking advantage of that 80.20. And then now we just got this deep correction. This dollar is continuing to sell off, right? So look at this from the daily. This is coming down. We're still within this AB boundary, right? But you can see how it's kind of, if you look at it, right? It's kind of just all over the place doing this thing, right? Look at this. Not giving us much, a lot of back and forth. Right now, right? It's obvious. Dollar's weak, moving down. Okay. Joey said the VIX crept up a little bit. Okay, the markets became a little risk averse, down, right? So we just read why regarding the DXY. So this may continue to fall bearish, but we're still within our AB boundary, right? We're at 86%. But we may come back to retest, right? It's 141.91 level. Let's just look at the price action, right? For what it is, right? So we've been saying it for a while now that the dollar is tricky. The dollar is tricky. So a lot of back and forth right now with the dollar. Right? Not the best trading conditions, right? Unless you're just overall just a bear long-term period, um, on the dollar. Right? Then you would probably be looking for shorts, but I mean that's coming down now, right? On that UJ, right? So that's one, two, three, four, five, six, seven, pretty much 8 red candles there, right? We got that day where it was a little back and forth, kind of neutral. Tried to reverse out, but not a whole lot, not a whole lot.
So basically, what was that? The with them decreasing the export fees, that helps them out, huh?
Yeah, yeah,
Okay.
yeah. And Japan,
Yeah. They
yeah,
I have to I lost the article. It was like a news flash and I just read the title and it said something about Japan. I want to say they decreased the export fees that had came up.
increased them. Yeah, yeah, because that's what drives their economy is exports. This is a decrease. It was a decrease, I thought, right? If I'm not mistaken. I have to look that back up, but yeah, yeah, to kind of, incentivize, right? To incentivize. But this is mainly, being driven by the concerns with the dollar, right? So it's just a little crazy right now. But we'll see. We'll see what happens. Of course, if we know if let me see here what we've got on this four. Because we played that short reversal to the upside. But you can see how this is kind of just moving. This is really just moving across the middle of your screen like a large range, right? And so you take advantage of what you can when the play is there for your sweet spot. So you can see how it clearly took out this A on this leg to the downside, right? Moved up, took out the A, and now it's coming down. So it's just back and forth. It's just back and forth. Right? And so we'll see, right? Because we're still within this AB boundary. We'll see if it wants to hold up in reverse. Okay. So I'm not in it in anything right now. I don't I mean look, I'm not in anything regarding the with the dollar right now. No, I'm really in ETFs right now. Like I'm holding the spot positions. I'm up in one spot position, down in another. The QQQ I'm up. Um 1600 on EFA. Um EEM I'm up 835. My TLT is down, but I just hold that. Right? It's part of the portfolio. But I'm not in any dollar related repairs right now. Right. So we had a beautiful ABCD wave there, and now we're correcting. So this could go either way. Is really the summary on that, right? If you know continue to see dollar weakness, of course we're going to take that A out on the four, and then we'll head down for that retest of that level, right? That we see here, that daily level. Um, you know, and we'll see what happens with the bill and the risk sentiment, right? The VIXI, see if it continues to move higher, right? That can lend some strength to the Japanese yen. And that's where we are, right? But that dollar, we've seen on the DXY that that dollar is moving down, right? Take a look at it again here. Oh, matter of fact, I don't think we looked at it uh, a whole lot. But you can see, right, that dollar's moving down, right? We broke trend line on the daily, and we're moving down. Mhm. Not you know, could, right? Take out this low at what is that? 97.80, right? But we've got some traffic that we've got to fight through first for that, right? So here it is on the four, right? Moving down. Okay. Hold on one second. Okay. So yeah, that's where we are, right? That's bearish right now for the dollar. So we'll see how that UJ is continues to be impacted, but no real play on it now unless you got some people in the group that played the short. Did anybody play the short on that UJ? Anybody shorting it?
Yeah, I played it. It hit my target, and I had got out, so I was riding the waves. And my limit order came in at the deep retracement. I got one long position in, so
Okay.
I was just I was just banking on that. Even though both of them was weak, that the U.S. was a little bit stronger, but Japan is winning.
Yeah, they are right now, and that inflation is holding steady there too. Um, so we'll see what happens. All right, so that's where we are there. Jeremy, does EuroCAD play? Let's see what's going on. Check back in on the EuroCAD. Still moving higher, right? We broke that trend line a while ago. It's kind of moving sideways now, but we've made the swing. I still like it long. I still like it long. You know, against the CAD, we know that the ECB is going to cut rates next month, but that euro has been pretty resilient. So, you know, if you I mean you figure this came through this morning, where are we at, right? That's front page, right? So we expected to lower it, but you don't see too heavy of a reaction in this euro CAD play. So I still like it long. Jeremy, you long on it? Or you're just taking a look at it?
I took 80-20 play short on the one.
Oh, on the one. Okay. I've been riding it from the four. So I see this move here, 80-20 short on the one. Where are you dropping your fib at?
On the high.
Oh, from the high here?
No, on the last high. So right, I'm on my phone, so
Oh.
yeah,
This here?
yeah, I think so.
Okay.
Yeah,
20.
no, um,
You said you played it off the one?
yeah,
Short off the one.
yeah.
Extension there. Let me know if you ever, I know you're on your phone. Let me know if you can find, if you're able to find the price level. We'll check it out. I uh I just been playing it pretty much long off the four. Yeah. You
Benny,
found
where
it off
is
the one.
Cad getting their strength from?
The cat?
Yeah.
I don't know. I don't know. I've been down on the cat. Let's take a look at it. Let's see what's going on. Firm rebounding now my both seen it's against the dollar as markets weigh April's inflation data along with U.S. currency weakness slowed to 1.7 year over year, the softest in 7 months, thanks to 12.7% plunge in energy costs following the carbon tax removal and OPEC supply increases. Yet, Bank of Canada preferred trim mean core gauge unexpectedly rose 3.1, its highest in 13 months, underscoring persistent underlying price pressures engaging against an imminent easing policy. Simultaneously, talks between U.S. Vice President Vance and Prime Minister Carney bolstered hopes of comprehensive trade accord, reducing bilateral uncertainty, further strengthening the loonie was a broad retreat of U.S. dollar, wake of Moody's. So mainly related to the dollar, right? Impacted from the dollar. And then you've got, all this stuff with the trade stuff is so back and forth. It can change on a dime, but I guess it's in sort of a boost from, I guess there's less uncertainty because they're talking. But what does that mean next week? You know. Uh so I'm not looking for overall Canadian strength. So we'll see. Like you see here, this is bolstered by what's going on with the US, right? As a result. So it's not necessarily anything, you know, I mean, their true main core, it rose to 3.1%, the highest in 13 months, underscoring persistent underlying pressures, right? So maybe but their core CPI slowed to 1.7%, the softest. So that's kind of a back and forth fight. That's related to, when they're looking at the possibility of further rate cuts or not making the rate cuts. But I don't know. I don't think there's too much there for long-term Canadian dollar strength. I think it's just what we're reading here is temporary. Um, but I'm still bearish on the cash for the most part. It's a good question. Yeah. So I don't think it's anything there that create a long-term shift for cash strength. I mean, we know what's going on with oil, right? So we see and that's a major driver for Canada. That's a commodity. So that's where we are on the Euro CAD. Reese still playing at 80-20 buy on the S&P 500 30-minute. Let's take a look at it. S&P 500 30-minute. Let's take it down to the 30. Let's go down to the 30-minute. Man, so we almost got there. We moved up. You still holding it. It went back flat. Dang. Also looking at gold, right? So we'll see what happens. So this is yeah, it's still we're still in that zone. That man, that how close was that? That's all good. Man, so that you weren't able to take profit on that, huh? Reese? It got close to that target and then went flat. All good. So that's where we are. You just waiting on that 382, yeah. Yeah. Then it spiked back down. But it's holding up though. So it didn't completely crash after that bearish candle right there. That's a huge bearish candle. So it's
It
moving sideways trying to figure itself out. Go ahead, I'm sorry.
it broke above. We was talking about this last week. It broke above a weekly support and resistance zone, and
Mm,
it's like it's a pullback from 5790.
57.90.
Yeah,
Yeah, that's man, I got close. But it didn't like I said, it didn't completely fail and collapse, so that still got a shot to hit that target. Let me back out. Yes. Man, I can't stand when it gets close like that, then it reverses. So I got a tight stop below the low. Yeah. Okay. Where we are on a monthly. I had it running low. Look at that. That's crazy, yeah. Let me clear this out. See, we are on the weekly. All right, so we talked about that. Daily, how's it making its recovery? Maybe boundary there. Right. See what happens with the bill. Deb, good morning. Appreciate you joining us. All right, so let's see what we are on this for. All right, it's kind of stuck in no man's land right now. Super small candles, right? Super small candles. It's the holiday. We're in a holiday week. So we'll see what happens. We'll see what happens today. Like I said, I don't expect, you know, unless it's something that comes out of Washington, today is something major, which I don't know. I don't foresee that happening, but I think it's pretty gonna be pretty weak today. So that's where we are on the S&P. Uh, push up and hit the 80-20 zone on the 4 hour. I can see that. I can see that. I can see that eventually happening. Like I say, I'm sitting back patiently. Like I said, I'm holding my S&P positions. I'm up in one, down in the other, but it was doing actually doing pretty good. And then the concerns came from this big from the big beautiful bill. Uh, so I'm still negative on one, but I'm just gonna hold that for sure. Because it'll eventually recover. My risk management is good. So like I say, up on one, S&P position, down on the other. Um, my position on the QQQ, I got a good entry on that one coming off the low, so I'm up on that. But I only took because of the everything was so back and forth. I didn't take. I took very, very small positions, on these, you know. Hindsight, you always say, man, I should have just went in a little bit bigger, but you got to be cautious during these times. So the QQQ position is small, but it's up 1832. So um, that one's doing pretty good. Take a look at the US 30, right? Everything's kind of just hovering, waiting. But I still like it long, US 34 hour. Um, Here's our NASDAQ, everybody on the four. We're up around that 80-20 zone, right? So Reese was talking about the S&P pushing to 80-20 zone on the four. You see this here, right? Where this is going. So we may see the same thing occur, right? We're right at the edge of that we're at 118 right now, pretty much. So it's just a matter if it wants to correct or push a little bit higher. But there's really nothing you can do with this, right? Okay. When there's nothing there right now. Right? And it's probably gonna stay that way. Looking at the Nikkei, move down to the four on this one. We've got smaller play there, but everything's kind of correcting, right? We rallied, now we're kind of pausing, and correcting a bit. So unless you're, on your lower charts, everything's kind of just chilling right now. Right? Here's another one on the UK 100, approaching that 80-20 zone. German 30 daily, right? Pushing up, right? And it just continues. We saw the huge correction that went across the board, and then you saw the same type of recovery moving higher, right? So all of them are kind of in similar positions right now. So it just is what it is. We have to be patient and wait. And right, and that's the Russell 2000 small caps. Right. So did anybody know? Let me see if they started let me did they hold on. Did they start to screens went blank again? They still don't have jeez, peaks. That's how yours open up too? No, I agree with you, Joy. Like it's some wild stuff in that bill. But I don't even like I said, I don't know why I don't know why everybody is surprised. The man is doing, for the most part, what he said he was gonna do. Right? Of course, things like no tax on tips and all that disappeared. Of course, they stopped talking about $5,000 checks. Of course, they did. That doesn't surprise me at all. But the man, anything, what a mess. All right. But the fact that this stuff is in the bill, like I don't know why. I don't know what everybody was during election time. I don't know what everybody was thinking. Well, 70 something million or whoever like voted for him. I don't know. I don't know. So it is it is what it is now. I mean, he could turn around and say like, this is what 70 plus billion people voted for. So it is what it is. Sad, but commodities. Looking at this gold right on a 30-minute from Reese. All right. Still sitting there. So that 80-20's got a chance, Reese. just can't make his mind up right now. Can't make his mind up right now. So that's where we are. Um, if we move up to right, so we were talking about this yesterday. Tyrone's target at 3150. It reversed pretty much right at 3150. So drop Tyrone some sevens in the chat in case he watches this later. All right.
That's all Go been doing all week. I had did a it was an 80-20 on the 80-20 right there on the 30. And I'm like, I don't think it's gonna go. And I end up playing it long. I got 300 pips.
Oh wow, congratulations. Drop some sevens. Stay long on it, right? Just went ahead and rolled with it. It's back and forth. Like when you when you see like certain assets like moving back and forth, it just tells you like where market participants are right now. Like, I don't know. You know, that's what they're saying. Like, who knows? Like we saw the VIX get back up. Around 20. It's just slightly over 20. The concerns over this over this bill. Like, I don't know. It's just a weird game, and that's why I like trading fibs and trading sweet spots because to me it still plays like there's market manipulation and everything else, but the Fibonacci sequence and the principle still hold strong and hold true. That's why, once I was trained on it, I stuck to it. I stuck to it because it's crazy right now. For everybody to act surprised that what's in the bill is in the bill, and all of a sudden so concerned and become risk averse. I don't know. I don't know how else you could have um interpreted everything that he said during the campaign, everything that was in Project 2025, everything that people said was going to be in this bill, like what his policies were going to look like moving forward. I don't know why we're reading that this has raised concerns that it could further inflate the U.S. national debt, and that the Congressional Budget Office estimates the bill will add nearly 4 trillion to the national debt, fueling fears of long-term fiscal instability. It's almost like it's just a it's just a ridiculous game. Ridiculous game. So, Deb, hand raised. What's up, Deb? Had it been an accident? Okay. So, moving back up, let's take this up to the daily to look, right? And this is just a broader picture of how spot on Tyrone was with that call. Right? Right up against Julie's 50 moving average and right at that 3150. And we saw the reversal. Yep, yep, yep. So, Deb, hello. I saw you had your hand up. Maybe that was it an accident? There you go.
Hello. Oh, thank you. Hello,
Yep, you're
everyone.
welcome. Hey,
Um, yeah, hi. I have a query regarding the sub-fibs.
yes.
Um, how do they work within the larger fib? Um, is it possible for you to just kind of give me an insight, please?
Yeah, yes. So let's do this. All right. So we have our large fib. Okay. Okay. So we're going to call this our give me 1 second, everybody. All right, sorry about that. So this is our capital bid, right? This is our large fib. Well, the market when it moves through its progression, right, to our extension, right? So we got a 618 here. Okay. Like so. We have 618. And so if we get a 618 pullback, what extension do we expect to hit eventually? She muted. So we get a 618 pullback, we expect a 1.618 extension, right? Like so. Bam, eventually. Okay. So here's the thing. The market doesn't just move in a straight line how I have it drawn out here, right? It doesn't, right? So the market moves in waves, right? So this market really moves like this, right? When it retraces, it's going to move in ABCD waves. Right? When it reverses, you follow me there, Dad? I think we did. Okay, so when it reverses, right, it's going to move in ABCD waves. So this is our B to C. Okay, so all right, it's going to move in ABCD waves. It's like that. All right. So as it moves, there she is. All right. Deb, welcome back. Um,
Mm.
yep, lost you for a second. All right. So, yep, as the market moves, right? It's going to move in A, B, C, D waves, right? So this is our capital fib. Okay. These, right, are our sub fibs, right?
Uh-huh.
Because as price moves from this B to C, right, you're going to have it move in waves, right? We always just have to remember that concept
Yes.
that the market moves in waves, right? See that? Those are your sub fibs. Just like if we go back, right? This is our AB boundary. We know our AB boundary used to be an OCD, right? It becomes a new AB, but even that would move in waves, right? So when we reverse out, okay, again, this is our capital fib. These are our sub fibs. So even when we reverse out, right? So say this was a 4 hour, we call this let's call this a 4 hour, we'll call it a daily, we'll call it 4 hour capital fib, right? And then these are sub fibs, right? Moving down. So even when it reverses out, right? Like so. Boom. We get this trend line break. Boom. And we start to make this C to D push, right? Where we got a 61.8 pullback, so we expect a 1.618 extension. Now we've broken our trend line, and guess what? Now we're going to start to make these ABCD waves to the upside, right?
The upside. Yeah.
Like so. Now we know this is a perfect drawing. We know that we get consolidation and all this other stuff that plays out, right? So then we reverse out, right? We come back. A, B, C, D. A, B, C, D. A, B, C, D, right? A, B, C, D. Subfibs.
Mm.
See?
Mm.
Right? So those are your smaller waves within the larger wave, right? Because the market, we can never forget that concept that the market
Moves
moves
and waves.
and moves in waves. So this is your capital fib, and these are your sub fibs, right? And the lower you go, right? The lower you go, so this is a 4 hour capital fib, right? And these are the sub fibs running off of it. But as you move down through the time frame, so say I'm starting to see the D push on my 4 hour capital fib and I got these suffers, I could drop even lower. I could drop to the 30 minute, right? Because we have traders in the group that do that, right? Reach trades on the 30 minute, 15 minute. We have traders trade on the 15. We have traders that trade on the 5. So all when you move down through your time frames, right? It's just working hard, developing a spatial intelligence just to understand it. So on a 4 hour capital fib, if I'm pushing on my C to D, I'm getting long. Well, guess what? When I move down to my lower time frames, right, it's just going to be smaller waves playing out. Right? So we have people that say, I'm trading the 15 minute chart. They're just trading the smaller wave. That's all they're doing. Right? I know I'm moving. I know I'm moving long on this 4 hour, but I'm gonna drop down. I'm gonna trade the smaller waves on the 15, right? The 5 minute, right? Because it's all ABCD waves, right? Because we know it's moving long, right? Because this is a 4 hour CDD push. So these are your sub fibs, right? So the framework stays the same. It either gets larger or it gets smaller depending on your time frame. That's all we do. Is the same thing. So you may look at a 4 hour chart. Oops. You may be looking at a 4 hour chart and you say, I'm at a 61.8 and I get a trend line break, right? Remember, that's some of the extra confirmations, right? I got a 61.8 and then I need a trend line break and a pullback. Well, you would be trading a sub fib off of that, right? So if price reverses on this 4 hour, it breaks trend line, pulls back, right? Then you may look to enter the trade, right? And you can see where this, within our Fibonacci framework, this is where our price action patterns, right, play out. Where we have our crowns at our reversal points and things like that, right? And so we look to play these pullbacks. So it all happens within the framework. Okay? And so you may drop down, like we said here in this example, you may drop down to the 5 or the 15 minute and play a smaller wave here. It just gets smaller and smaller and smaller and smaller, right? As you move down. So that all comes down to you and your trade psychology and what time frame you like to trade on. I'm telling you, it makes a big difference when you really figure out what time frame you want to trade on and stick to. So we always do our top-down analysis, right? We always look at the big picture. But then that main chart where you're going to take your trades, I highly, especially as newer traders, try to figure out what's going to be a chart. Is it going to be the 4 hour? Is it going to be the 1 hour? Is it going to be the 30 to 15? Whatever that is, stick to it. Try to stick to it. If if you have just a little tolerance, try to stick to it, for 3 months. Give it a quarter. If you're a little bit strong, try to give it a half a year so you can get results. So, hey, I'm going to go down to the 1 hour and I'm only going to trade, I'm going to trade C to Ds or I'm going to trade 80/20s, right? And stick to it so you can get data, right? So you can actually get some results. Like it takes time. I'm only going to trade 80/20s on the 1 hour. Do my top-down analysis. I'm going to trade 80/20s on the 1 hour. I'm going to trade C to Ds on the 1 hour. I'm going to trade C to Ds and 80/20s on the 1 hour and see what my results are, right, for both. Even if you do it in a demo, right? But because I'm telling y'all to do that because that's what's going to help you build confidence, right? That's when you lose for 4 or 5 trades in a row and you're getting frustrated and now you're ready to light up your chart with a bunch of indicators, right? You have to build confidence to say that even though right? I lost 4 or 5 trades in a row. My data shows that over time, my strike rate is 60%, right? So if I've lost 4 in a row, then that means if over time all my data showing I'm 60%, then that means hey, that's my six that I'm expected to win, it's just around the corner. So you trade through it. And that's also why risk management is important, right? Because we can control our risk, but we can't control everybody, right? We can't control this right here. We can control our risk, but we can't control the sequence in which wins and losses occur. Make sense? Yes, no?
Yes, it does. Thank you very much.
You're welcome. We can't control that, right? So if you get data that shows over time, or your strike rate is 60%, right? Now we know we put ourselves in 3 to 1s, we only need to win 30% of our trades to make money, but we always want to look to improve our strike rate, right? So if I know that it's 60%, but I'm over leveraged on my trades, my risk is too high, and you take 4 trades and you blow your account, then you don't have any capital left for the 6 wins that's coming. So risk management is everything because we only can control what we can control, right? And we don't control the market. We can just control our approach to the market, right?
That's
So
correct.
yeah, no doubt, no doubt. Once I learned that, it's a game changer. Because as human beings, oftentimes we like to be in control, especially when it comes to our money, right? We want to force things to happen. We want things to play out the way we think they should all the time, right?
Mm. Yes,
So yeah. So that's what we have to always keep that in mind when we're in these markets.
yes, I'd post in the homework section a chart
Okay.
that I'd marked. And I'm following the rules and the guidelines.
Hmm.
You know, as you've suggested regarding the time frame
Hmm.
and developing a strategy that will work for myself.
Okay.
So, because I wanted to test trading Go,
Hmm.
and I find that it's very, it moves very fast in the market.
Yes.
So I'd use the smart analytic sorry, I can't say it at the moment. I'd use the smart
That's great.
tool.
Yeah, smart
Thank you.
analytics tool. Hmm.
Yes. And there was sub-fibs. There's different sub-fibs that it shows.
Hmm. Hmm.
So I'd put the smart fib, run the smart fib, following the rules, looking at where the retracements were, marked my trend line. And I was looking at the level on the sub fib because I was only going to be in there for a few minutes.
Yeah.
And there was an 80-20 setup in the larger fib, but there was also an 80-20 setup. But I was looking at playing the trade to the downside, looking at where it had retraced to on the sub fib level. which I believe it was a 618 or 50%. I think it was a 50% level. And I
Mhm.
would have played it to the downside only for a few minutes. Um, and that's the reason why I ask. So as you've, demonstrated, it is fib within a fib.
Yep, exactly what it
And
is.
understanding, yes, and understanding that, for example, A to B, there's so many fibs in the
Hmm.
smaller wave. So I understand that. Thank
Yes.
you. Yeah.
Yeah,
So I
you're
would,
welcome. You're welcome.
so I was looking at same strategy, just following. I would have put in the sub fib level, I would have put my stop loss below the A, just below or above the A. Looked
Hmm.
at if it was a 50% retracement level, um, where the color, um, where what the color is, red to red, blue to blue, green to green, wherever the levels are. I would have just followed the same strategy and just got out.
Yep,
Um,
same strategy.
I had a feedback from Ryan, and Ryan has also suggested that I just stick to larger fib level until I more confident and get used to the rules, and then
Yes.
maybe look at trading the smaller fib waves. So that's why I ask. Thank you so much.
Yeah, you're welcome. You're welcome. And if you're looking for, to get more reps, and like you said, right, good suggestion, focus on those capital fibs. But if you're saying like, man, like I want more reps, then just trade a capital fib, as you're learning. Go to the 15 minute, or go to the 30 minute or whatnot. Like if you're looking for more price action, but yeah, sticking to the capital fibs, then just drop down to a lower time frame where those fibs play out more frequently, but just stick to the capital fib, and then move into that sub fib concept. But you seem like you picked up on it and you got it exactly. It's the fib within the fib for sure. So I appreciate you doing that.
Thank you.
Yeah. Yeah, great work. So that is it, everybody. Enjoy the rest of your day. I've got to check with Ryan because it's the I am headed out of town this weekend. But let me check with Ryan to see what he's got going on for Saturday. To see if we're gonna have that session. But we'll communicate it out. But I know I'm definitely going out of town, and so we will follow up with everybody in the group regarding this Saturday for the holiday. All right. Deb, yep. Have a great day as well. But be looking out in the community. We'll make sure we get some things posted. Appreciate you all being here this morning. Awesome session. Appreciate the feedback and all the thought this morning. So bye for now, everybody.